Hi, everyone. This is Luke from Breakout Trading. You can find us at facebook.com/walls, it's plural, from the street. Again, that's facebook.com/walls from the street. We stream there daily when the market's open. We usually go live at about 9 a.m. But I am very excited to introduce the Breakout Trading University. This is our first time semester, and we are doing Day Trading 101. Course one, of course, is day trading orientation. This is more geared towards people who have never day traded before, just have to be able to get everybody involved. And then there's 14 more courses. So course 2 through 15 is for the beginner to novice trader or anybody trying to learn technical analysis or just find their strategy. Um, there is the big statistic out there, and I want to bring that up right away. 90% of new traders will blow up their account. And there is a reason for that. And part of it has to do with them not following a proven strategy. So, our goal of this series here, Day Trading 101, is to help you find your strategy. Everybody that has a strategy that will work best for them based on many different reasons, the amount of money you have, your patience level, your discipline level. But one thing that I do want to go over, and I'm sure, especially if you're new to this, or if you've ever tried trading or have watched someone else day trade, you know that it seems like a fairly easy concept. You may have heard the expression, let your winners run and cut your losers quick. It's actually a Jesse Livermore concept, which we will get to in another chapter. But let me ask you a question. Day trading is a lot like flying. It's not so much of a question, it's more of a statement. Day trading is a lot like flying, uh, and let's say landing a commercial airliner. Professional pilots make it look easy, but if you had to do it yourself, it would seem nearly impossible. What you have to remember is that pilots undergo intensive training. They likely started practicing on a flight simulator first for at least 1,000 hours until he or she would then be allowed to practice on a unmanned, let's say 747 commercial aircraft. There would be a co-pilot there along with an extra seasoned pilot and flight instructor in case the training pilot is unable to handle the aircraft himself. This process is very similar to what you're going to go through. There's no need for you to crash any planes or blow up accounts, rather. You are going to get the necessary education, trading experience, and mentoring to be able to trade at a profitable level in about 1.5 to 3 months. Um, 6 months to 5 years is the average. So that's pretty dang good. Of course, this depends much on a person's personality, discipline level, and obviously their active participation in the group. Please be sure to watch every class and make sure you pass every quiz and exam. I or one of the other breakout trading admins um, also live stream trade for free every day on my Facebook page, which I mentioned earlier. The link is below in the description. And when possible, we do go live on YouTube. I suggest friending me on Facebook. That way you get the alert when I go live, and also subscribing to the YouTube channel so you can see when the new classes come out. Classes will be coming out daily, every day, excluding Sunday. And in terms of the live trading, we usually go live around 9 a.m. Eastern Standard Time, any day the market's open. Um, all right, so let's go ahead and let's move on with the presentation here. All right, so what to expect during this course, this entire series, rather. Um, there's going to be 15 classes, so 15 educational videos, 1 to 5 mini quizzes per video. You'll receive 3 midterms and then 1 final exam. Okay. Pretty clear cut. It's a nice, simple strategy. This is actually the same strategy that they use when you are trying to get your Series 7 or your 66. So I basically stole it from them. All right. Progression. Like I said, you start with Day Trading 101. You pass all your exams. The levels you have to get to pass those exams will be addressed later, and then you'll move on to Day Trading 102, and this is a more advanced class. Here are your classes or courses. Um, so right now we're in day trading orientation. Course 2, which will be tomorrow because today is Sunday, is candlestick patterns. Course 3 is chart pattern recognition. This is extremely important, especially course 2 and 3 together. They kind of go hand in hand, but candlestick patterns in combination with chart pattern recognition can give you an even better estimate on what a stock is going to do. So that's why they are together like that. Course number 4 is going to be supports and resistances. Course number 5 is stay in your lane, which is basically the term we use for channels. Certain stocks, in particular indices like the S&P 500 and the Nasdaq and the QQQ, they tend to stay in channels. And when they exit their channels, they tend to reverse. Um, that's something that's pretty simple, but for some reason, a lot of people have trouble with it. So I'm dedicating a whole course to that. So after you take course 1 through 5, you're going to have to take your midterm. It's 20 questions, midterm number 1. You have to get it 80% to pass. That just means you can't get more than 4 questions wrong. Course number 6 is chart studies, things like VWAP, MACD, Achimoku, the 9-day moving average, which is an essential moving average for day traders. Course number 7 is order types. For example, limit orders, stop limit orders, stop buy orders. We're going to go over all the order types, their importance for breakout traders, and you know, just day traders in particular. The stop buy order is going to be something you find very important, and I'm going to show you an example of that later on in the program. So we're also going to go over time and sales and level 2. Okay. Course number 8 is pivot points, one of my favorites and one of Jesse Livermore's favorites. But by the way, I might as well address it now because I've said his name twice already. If you don't know who Jesse Livermore is, he was the Warren Buffett of the Roaring '20s, the Great Depression period, and World War II. This man made a fortune, lost it all, made it all back, and then made the sad mistake of losing it all again. Um, and finished his life with a bullet in his head. But that doesn't mean his teachings are going to end up, you know, giving you the same ends, or having you meet the same ends. But all right, so course number 9 is finding winning stocks, figuring out their entries and exits. That's a beautiful one. It kind of goes hand in hand with pivot points. Chapter 10 is a pretty big one. Proper money management, risk management, and emotional control. I figured that's the best chapter to put emotional control in, because that's typically when people lose their emotional control, is when it comes to uh, them losing their money. Um, all right, so that'll be followed by a midterm. That midterm is going to be 30 questions. Again, you need an 80% to pass. Now, this one's 30, and the reason for that is there will be questions from one of the first, or from the first 5 courses, mixed in there to help you learn. Again, this is a learning method that I kind of stole from the Series 7 training courses. All right, so let's go. Chapter 11, the the Jesse Livermore formula. Okay, so we are going to go over things in this chapter, and this might be probably one of the longest courses, but we're going to go over, you know, these might not mean anything to you right now, but challenge of speculation. When does a stock act right? Follow the leader, money in the hand, the pivotal point, the $1,000,000 blunder, the $1,000,000 profit, time and secrets, money management, emotional control, computer interpretation, and Livermore's secret rules of the stock market. We'll mostly be focusing on the last chapter there. But all right, so keep going on. We're going to go over, okay, so now after we go over the Livermore formula, we're going to start getting into different types of strategies. So we got the 5-finger strategy. That is for stocks that are between 90 cents and $12. We're going to go over point plays. That's typically stocks that are $12 to $2,000. You're just trying to make points. And when a in the stock market, when we refer to points, we're referring to dollars. Like oh, the Dow Jones went down 50 points. That means it went down $50 technically, because that number is technically a dollar amount. All right, so course 14, options introduction. So this, again, if you are a beginner, is something I want you to stay away from in the beginning. I don't want you trading options, but I'm going to give you that introduction. Unfortunately, in this day and age, apps like Robinhood and Webull are pushing underpriced options down your throat, or overpriced options. You guys are buying them. A lot of people are getting killed. New traders should stay away from options. So I'm going to give you an options introduction in a way that I think would be best befitting for a new trader. Okay, and then course number 15 is finding your circle of competence. Within breakout trading, we have a group called the COCA, and stands for Circle of Competence Alliance. And it's essentially a group full of people, it's a chat room, that have found their circle of competence. Now, what is your circle of competence? Your circle of competence it's something that it's the strategy basically that Warren Buffett uses. It basically, he says, take all the crap that you don't know and you don't fully understand and focus on what's making you the most money, and that's your circle of competence. So finding your circle of competence is huge. It is the key to success in your trading. All right, so then you're going to have midterm number 3. That's 40 questions. Most questions will be on course 11 through 15, and then we'll throw some in there from course 1 to 10. And then finally, we'll have the final exam. For this, you need an 85 to pass. And the reason for that is once you pass all 3 midterms and the final, you advance on to day trading 102. All right, let's move on. Fundamental versus technical trading. So fundamental versus technical trading. 1 second here. All right, so fundamental versus technical trading. To put it simply, I'm going to put it very simply. Typically, fundamental trading is for people that have a lot of money. Okay, talking anywhere from, you know, 25,000 to millions. They tend to stick with fundamental trading because they can. Now, technical trading is for usually used by people that have um, less money. But keep in mind that is not always true. Okay, so let's read what fundamental trading is first. Fundamentalists trade companies based on fundamental analysis, which examines corporate events, particularly actual or anticipated particularly actual or anticipated earnings reports, splits, reorganizations, or acquisitions. So they're basically looking at the numbers of the company in a sense. Long story short, they're saying, is this a company, for example, Warren Buffett is a fundamental trader. Uh, Warren Buffett will say, is this a company that will yield me a good return in 10 years? And then he'll typically go ahead and look at the numbers of the company. He'll say, well, right now the valuation of the company is less than or more than what the overall stock market cap is worth. And that might be something that would seem appealing to a fundamental trader, and they might trade. So the main specialty of a fundamental trader is research. They're doing research. They're looking up companies. They're looking up their numbers. They're looking up all that. Okay. Usually, fundamental traders trade over long periods of time. So typically, they will hold stocks for a quarter. They'll hold it for a year. They'll hold it for multiple years. Unless it's a loser, of course, they might get rid of it fairly quickly. Now, typically, fundamental traders look for 5 to 10% yearly returns. So they're trying to make 5 to 10% on their investment annually. Now, technical traders, and that is mostly what we are going to be focusing on. You really don't mix the two of fundamental and technical. They do get intertwined sometimes. Like sometimes you might see a crazy technical formation that has to do with something fundamental, such as an acquisition. So technical traders focus on charts and graphs. They analyze candlesticks. Um, they analyze candlesticks on stock or index graphs for candle or chart patterns that might signify a potential uptrend or downtrend. I know the way I read that just made it seem really confusing, so I'm going to read it again. They analyze candlesticks on stock or index graphs for candle or chart patterns that might signify a potential uptrend or downtrend. Okay. Um, Main specialty is speculation. So they are literally speculating. That's your job. It's not to trade. Your job is to speculate and see, you know, are these candles, is this pattern, is it hitting a new high? What technical indicators tell me that this might be something I want to invest in? And I'll give you a good example a little later on. Trading is usually extended over a very short period of time as opposed to, long term like fundamental. Anywhere from a couple of seconds to at most a couple of weeks. And when you trade over a couple of weeks, that's commonly referred to as swing trading. But this is day trading 101, so we're not going to focus too much on swing trading. We're going to focus mostly on day trading. Now, typically, a technical trader is looking for a 5 to 10% daily return. So that's a huge difference, guys. A 5 to 10% annual return to a 5 to 10% daily return. That's what makes technical trading so appealing. And even to people that have a lot of money. But let's go ahead, let's move on to the next slide. What you need to get started. First of all, education. That's what we're doing right now, and that's what these courses will be about. Right now, you just need a notebook and a pen. If you don't have one yet, please get yourself one. A notebook and a pen, that is it. Money. Let me go back. Money. Money, 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 money. But not so fast. First, you need emotional control, discipline, or maybe you just need money. Maybe you don't have the money to trade but would like to trade. Or you have $300 and you think that that's enough to trade. And I've seen it all. But I've spoken to people, I've had in depth conversations, and I'm not putting anybody down. It's just, like I said, it looks easy, but the reality is, I'm not going to sugarcoat it. You need money to be able to trade. If you think you're going to be able to quit your job because you got $500 in your brokerage account, you better not quit. You, you better work a little more, maybe get that balance up to at least where you can get some marginal leverage and but let me not go too far ahead because now I'm talking about margin and things of that nature. Many traders fail because they jump into the market too quick or they use money they cannot afford to lose and make decisions based on fear. That's another thing I've seen, and it's very sad to see. But a trader will not have the proper that they'll be using funds that they can't afford to lose, funds that they might not be able to make their mortgage payment if they lose. And when you're trading with money like that, when you're essentially gambling with money like that, because that's all the market is one big casino, you will make judgments based on fear. And let me tell you something, if you're in a fearful state when you're trading, you're not going to do very well. That I can assure you. All right. Next on the list is a broker. You got to find yourself a broker. TD Ameritrade, let me start off, is my preferred broker for you to start with for a number of reasons. I know they're a little more on the expensive side, but you get what you pay for. Um, Also, they have a bunch of deals going on right now that I will show you quickly that if you put $3,000 in the account, they'll give you like 500 free trades, up to 500 free trades for in I think it's 90 days or something like that. So there's a lot of deals going on right now where you can get free trades anyway. So yeah, you need a broker, and we'll go over all the stuff I'm talking about right now. We're about to go over in depth. So let me just kind of blow through it. Um, you need a trading platform with technical analysis tools. Again, TD Ameritrade offers something called thinkorswim, which I will show you in a little bit, that offers technical analysis tools. You may be asking me, what is technical analysis? It's about 40% of what you'll be learning. Um, Okay. Fifth, you'll need a stock scanner. Again, TD Ameritrade provides one. It's another reason I'm, again, telling you to go that route. So you'll get thinkorswim, which comes with a free one. And then also, I have two really good ones I'm recommending as well. Trade Ideas, Benzinga Pro, and so on. All right. Education. Okay, that's the first one we were talking about. Education is a trader's most important resource. The majority of traders fail from easily avoidable mistakes. The most common mistake of a new trader is not following the rules of a proven strategy. This entire program, Day Trading 101, and its 15 courses has been tailored so that by the time you complete the final exam, you will have a full understanding of the trading techniques and strategies I personally use to make a profit in the stock market. While taking these courses, I would suggest you practice what you are learning, especially chapters 2 through 8, which are the fundamentals of technical analysis. Um, Again, I would like you to practice this on a paper trading account, in particular, TD Ameritrade's thinkorswim. They will let you put on what is called a paper trading account, and that is where you can trade the market while it's open. You can trade it live, all with like fake money, just to practice, just to see. That is your flight simulator, so to speak. And you can also practice when the market is closed. You can pick a date, press play, and it will play as if the market was going from that point. A couple book recommendations here is How to Trade in Stock by Jesse Livermore, Market Mind Games by Denise Shull, and then How to Trade for a Living by Andrew Aziz. All great books. Maybe take a screenshot, but let's go ahead and move on. Ooh, too fast. Money, 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 money. That was second on the list. Bottom line, if is you need money to trade. If you don't have money, or you don't have, that makes no sense. If you don't have money, or you do have money, sorry, let's explore your options. First, I want you to understand the definition of investable funds. Remember that we were talking about the guy earlier, or the scenario earlier where you're investing with your mortgage money, and you know, or the money that you would use to pay your mortgage. Those are not considered investable funds. Investable funds, this is money that if it were to disappear tomorrow, your life would not change, and it would have no detrimental impact on your life. Emotions aside, because it sucks if you just had $25,000 vanish, but yeah, you would be able to, move on, is what I'm saying. All right, so let's look at two type of people. One that has money, one that has less money. So this person on the left has 25,000 or more in investable funds. What are his options? Become a profitable trader on a trade simulator, aka paper trading, before he starts trading his real money. Right? I think if he wants to get into trading his real money, he should first become profitable on a paper trading account, especially with all that money. So, point two says he wants to start day trading. Let's say he is aware of the statistic that 90% of new traders will blow up. And you see that little star there? Blow up means lose pretty much all your money in the account. So he knows, this guy is aware that there's a 90% statistic. Maybe that's why he did his, his flight simulator, his trading simulator, that he knows about the 90% statistic that he could blow up his first account. And by the way, after you blow up your first account, the statistic goes down to 50%. So if you've blown up an account before, and now you have a 50% chance, which ain't too bad. So anyway, their first account he can play is, sorry, let me read it from the top. He wants to start day trading. Let's say he is aware of the statistic that 90% of new traders will blow up their first account. He can play it smart and keep 80% of his money in a healthy stock or stocks. You know, he could put them in a bunch of blue chip stocks like Apple, Facebook, whatever, and just leave them there. And or some S&P 500, ETFs. And an ETF is simply a stock that mimics something else. So you could put it in an S&P 500 ETF and hope that he gets his 7% that year or whatever it is. And he could do that with 80% of his money, and that would be pretty safe and pretty smart. Then he could trade freely as much as he wants with the other 20%. This would be my advice to a person like this. If someone in the group comes to me and they tell me they have over 25,000, I always say, listen, don't trade at all. Don't start day trading at all, because what happens, what you might not be aware of, when you have $25,000 or more in a U.S. brokerage account, they give you 4 times your money to trade with. So that's $100,000 to trade with. So typically, what I tell them is to do exactly what it says here. I say just use some of your money for day trading, and then put your other money in something safe and just let it sit there. And you know what most of them realize? They end up making more money from just their blue chip stocks than they do day trading. But long story short, another thing about having more than $25,000 is you are not subjected to the PDT rule. What is the PDT rule? It stands for the pattern day trading rule, and it restricts you, if you have less than $25,000 in a margin account, to only 3 round trip trades a week. So that means you can't make more than 3 trades in a week. That's really hard to make money when you can only make 3 round trip trades in a week when you're trying to be a day trader. So a round trip trade just means you bought and sold it in the same day. So this guy, he's not subjected to that because he has more than 25,000, and he's only using a little bit of his money to day trade. So he's in a good position. Another option he could do is, technically, he can find a fiduciary financial advisor who can invest the money for him if he thinks he will be tempted to day trade in larger amounts. Just to clarify, I would only advise this to a brand new trader. If someone's got no experience and they don't know what they're doing and they got $100,000 and they tell me they want to day trade, I tell them, listen, I said, put that money somewhere safe, find yourself a financial advisor who's a fiduciary, and all that means, a fiduciary, basically, by law, they have to work in your best interest. Believe it or not, I know that sounds scary, but it's true. Most financial advisors are not fiduciaries. They're working in their best interests. They're selling you products, annuities, mutual funds that are going to make them the highest yield. They don't really care about you. So always look for a fiduciary. Charles Schwab is a good example of brokerage that is a fiduciary. But that's what I would tell a completely new person. All right, now let's go on ahead and this person has less than 25,000. Now, we actually did a poll in my group, and we found that anybody that was trading with $25,000 or more out of the PDT territory had on average $38,000. And then anybody trading with less than $25,000 had an average of $2,464. So that is not a lot of money. So we have to make the most of it and use whatever resources we can to turn that 2464 into a larger sum of money. That's the whole purpose here, right? So become profitable on a trade simulator, aka paper trading, before using his or her real money. By the way, you notice that that's on both sides. I would give that advice to someone with a lot of money and someone with a little money. You got to become profitable on the simulator. All right? You wouldn't fly an airplane if you couldn't fly it properly on the simulator, would you? Not unless you have a death wish. Now, there's something called the paper paradox, which I'm going to briefly explain. The paper paradox happens when traders, they actually trade on a paper trading account for so long, and they get so used to trading this digital, not real money, that when they go ahead and switch over and start using their real money, it's it's very hard for them. Just as the pilot has to have a co-pilot there when he flies his first time, and a regular pilot, and then his flight instructor. So it gets very hard because now it's your money you're actually losing. And you might not want to sell, and you might it can get messy. Um, so I just wanted to bring up that there is something called the paper paradox, and the best way to beat this is to try to become profitable as quick as you can on a paper trading, okay? Which basically means don't mess around with too many different things. Don't start trading this and don't start trading that. Find your coca, okay? Find your circle of competence. Find what you're the best at. Perfect it. And then when you move over to regular trading with your money, you'll be confident, not scared. If you are confident, then the paper paradox has not affected you. But like I said, the only way to beat it is to find your circle of competence, what you are best at. All right, so now let's keep going on. So now because you have less than 25,000 in your account, you're subjected to this PDT rule and can only make 3 trades a week. This rule in particular has caused many new traders to blow up their accounts. Why? They will stay in a losing trade longer than they anticipated because they don't want to waste the trade. They're hoping it turns around. They don't want to waste the trade. Or they will stay out of a trade that rallied that they thought was going to rally. And the word rally simply means just take off. So when a stock rallies, it means it's doing really well. It's making a lot of money. So they will literally not buy a stock that they anticipated rallying because they were skeptic and didn't want to waste the trade. So it's like a lose-lose, lose-lose, lose-lose. So what's your other options? Let's take a sip of water. You can get what's called a cash account. So when you get your TD Ameritrade account or whatever account you decide to get, you can tell them, hey, listen, I want a cash account. It's still somewhat restricting, but you won't be subject to the PDT rule, and that can be even more restricting. I've seen terrible things happen because of this. You might be on your third trade, right? And you know what? You see something taking off, but you're like, you know what? I'm out of trades. but it's taken off and I don't want to miss it. So you go to buy it. And then what happens? You can't sell it that day because you know what happens if you sell it that day? They'll restrict your account for 90 days and then you can't trade for 90 days. And or you can't day trade for 90 days. And then if you do, they restrict your account entirely and just shut you down. So it's a terrible rule. It's really unfair that they do this to the new traders. They say it's to protect them, the low balance traders, but it's terrible. But if you get a cash account, it's still somewhat restricting. But actually found through my research, there are certain brokerages that it's not restricting at all. So let's say I buy 100 shares of UVXY on my cash account with TD Ameritrade. Once I sell it, say for a small profit, that money is going to take 2 days to clear. So if all I'm working with is $2,464, I need to be using all of that. Because in a cash account, they don't give you no margin. They don't give you no extra leverage. In a margin account, they'll double that 2,400 and you'll have about 5,000 to trade with. In a cash account, you don't get that luxury. So that is where it becomes restricting. But there is a way around it, and I will get into that shortly. Um, Here's another option you can do. You got about $2,400. You can get yourself a sub-funded overseas account. And because it's overseas, it's not subjected to the PDT rule because that's only United States. If you're in the rule, you'll get much more leverage. Like I said, in the United States, they'll double your leverage if you go margin with your 2,400. So they'll double your money here. And if you have more than 25,000, they'll quadruple it. They'll give you 4 times. But overseas, they'll give you 20 times your money. So you can go in there with $33,000 and they'll give you, whatever, $80,000 to trade with, which is a good thing and a bad thing. It's good because you can make a ton of money. If you just make 1% of $80,000, you made $800. Okay. The bad news is you can also lose a lot very quickly. So you want to make sure you are profitable first before you do this. And then the last one here says trade options. And again, I don't recommend this until you're profitable with stocks, and I don't recommend it until you've taken an options course, either with myself and even TD Ameritrade. That's another reason I love them, offers an options trading course. Don't just jump into options. Please don't do it. You'll lose money, I promise you. Okay, so online or mobile stockbrokers. Here are my top recommendations. Boom. TD Ameritrade. It's $6.95 a trade. No minimum account fees, platforms, blah, blah, blah. Necessary for great technical and even fundamental stock and chart analysis. You're going to be able to get thinkorswim, which I'll show you in just a second what it looks like, and it is just amazing. Now, this $6.95, as I discussed a couple seconds ago, they actually have a deal right now, and I will add that link to the page if I didn't already add it. Let me see. Here we go. Yeah, they have it right here. They have a whole bunch of specials. I believe I added it to the page. If I didn't, I will. But you got, let's see what they got here. If you put in 3,000, 90 days commission free. 25,000, they give you $100. Yeah, 90 days commission free. Blah, 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 blah. And you can also negotiate with them on pricing. I do not pay no $6.95 a trade. I got them down to I pay $3.95 a trade. That's it, $3.95. That's not terrible, and also It's not great, it's not terrible, and I also pay $1 in options contract, which is pretty good. It's not terrible. So there are ways to get the prices down with thinkorswim, TD Ameritrade. Now, if you don't want to trade on TD Ameritrade and you just want to get thinkorswim for technical analysis, that is also my recommendation. And I'm going to leave it entirely up to you. If you don't mind paying the commissions, go ahead and stick with TD Ameritrade for trading and technical analysis. It comes in handy, and I'll explain why, because here's TD Ameritrade's thinkorswim, right? It comes in handy because I can literally just trade right on my technical analysis page. You see all these lines, technical analysis, here's time and sales, here's level 2, volume. I got some TTM lines on here. If I want to buy, I just hit auto send, buy, market, and I own the shares. When you use two different softwares, it's a little harder, but then again, not really. You could just pull out your phone and, find a formation and trade on your phone. Now, I do not recommend at all in any way, shape, or form Robinhood or Webull. Okay? It says it right here, so I'll just read it. I am not a fan of the free stock trading apps like Robinhood or Webull. It is on paper that they are making hundreds of millions selling the spread. So basically what they're doing, and Robinhood literally has a buffering wheel when you buy stocks, is they're selling it to you, even though you just bought it at $5.55, they're selling it to you at $5.60. And that 5 cents that they made, they're selling that to high frequency traders who are basically just people that take advantage. It is what it sounds like. That split second that you make that trade, they're taking advantage of that gap of whatever money they could pull out of it. And Robinhood in particular, it's on paper that they sell their trades to high frequency traders. So you might think you're getting your trade for free, but you're really getting, in a sense, legally robbed. On top of that, Robinhood, like I said, they have a buffering wheel for trades. Their execution is terrible. It takes forever for stocks to trade, for a trade to go through. Now, if you want to save some coin, I understand. If you don't want to go into the TD Ameritrade and you want to save some coin, this is amazing because I did not know this until I was doing my research. Ustocktrade, okay? I have been pushing Ustocktrade for some time now. It's a $1 commission, which is not bad. So $1 to buy, $1 to sell. That's very, very, very cheap. It really is. Robinhood is probably taking more than that from you on the spread per trade. And they have recently come out with same-day settlement. That is fascinating. That is huge, guys. Same day settlement. Remember how I was saying, TD Ameritrade in a cash account, you got to wait 2 days to get your money back. Ustocktrade, unlimited day trades. Second you sell, you get your money, you could trade again. It's $1 for trade, and you could transfer your funds in literally 1 day. No account minimums. I mean, these guys beat the field. They trade on what's called a dark pool. Now, typically, there's a primary and secondary market. When you trade on TD Ameritrade, you're trading on the secondary market. That's Wall Street. But a dark pool is a market behind the scenes. It's not on the secondary. It's not on the third market. It's its own thing. They literally say that this is peer-to-peer trading, and that's kind of what it is. I'm liking this the more I talk about it.
Ustocktrade is an alternative trading system, or ATS, offering peer-to-peer stock trading without the need to have another broker facilitate your trade. ATS have been around for a while and sometimes referred to as dark pools. These were traditionally used by institutions to try to execute trades internally among their own customers. These dark pools are used by brokers, hedge funds, and institutions, and often execute more than 50% of the order flow today. Ustocktrade has adapted this model so that if you want to sell a stock and another Ustocktrade user wants to buy that stock, the order will be matched at the agreed price directly between buyer and seller. In the event that there's no user to take the other side of the order, a liquidity provider steps in to complete the trade. All trades occur within the Ustocktrade network, and because we don't route or sell orders, we provide faster settlement and maintain extremely low fees, just $1 per trade and $1 monthly membership.
Yeah, guys, that's pretty cool. So I would say, having that, they do have an online thing, I believe, and they do have an app, but they don't really have a technical analysis app platform, which is what you need. Um, I think that is a good option. Now, again, money, 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 money. Let's go back to money real quick. That's all good and well, but if you're only putting a few $100s in there, you're not going to make a fortune. So let's pull this back up here. Okay. So again, these are my top recommendations. Now, I also recommend TradeNet, okay? Like I said, if you don't have a lot of money, they have different programs, and each program, as you can see, comes with additional bonuses. Like you can get the intro program, which is very basic. There's some educational tools in there. There's like a classroom in there. There's all kinds of stuff, and that's only it's really 500, but I think I provided a link where you can get a discount. If I didn't, I will. Um, but let me just read what it says. Learn to trade and become a better trader. Day trading for any skill level, novice to pro. TradeNet invites you to study, practice, and master day trading. TradeNet is a third option they provide. Oh, this is my writing. TradeNet is a third option. They provide sub-funded accounts where you can keep a percentage of the profits and also offer academic programs with every sub-funded account. Their commissions are on the low end. I think you pay like 0.006 cents a share. So they're they have reasonable commissions, and there is tremendous advantage to make a lot of money starting with a very small principal. So, like you could see here, for $3.99, they'll give you $14,000. You keep 70% of the profit. For $2,700, they'll give you $80,000. You keep 75% of the profit. 5,400, they'll give you $160,000. You keep 80% of the profit, and then for 8,100, they give you almost a quarter million. You keep 85% of the profits. And they even have like a $400,000 one too that they don't advertise. But what's interesting is it's a really good program. Uh, I do recommend it, but again, I want you to be profitable first. I personally use it. I purchased an $80,000 account and I've taken a withdrawal 3 times. That's the only thing that stinks, is that you don't get like direct access to your money whenever you want. You have to request within between the first and the 10th of the month your money, how much money you'd like to take out, and uh, they will give you that money on the 15th. They'll send it to your PayPal account, or you can request directly to your bank or whatever. But I have an $80,000 account, and it's very simple to make money in here. It is. You got to know when to use it, and that's one of the things that we teach in our live trading. When we live trade every day, is how to trade this, which stocks to trade, and how to basically make a fortune. Um, what was it? This I got on sale for 2,700. Last month I pulled out 3,600. So I made my money and then some. So, and then like 1,000 on top of that. So I don't care at this point. I've already made my money back on this account, so whatever I make is extra, and that's pretty cool. So this is another thing I recommend. They also because they do offer educational tools as well. All right, boom. So that is that, and let's see. Let's go back to here. So that is TradeNet. So that's brokers. So again, we're basically going over this stuff here. What you need. Education, we went over. Money, we went over. Brokers, we went over. Trading platform with technical analysis tools, we kind of went over. That's TD Ameritrade, which is thinkorswim. Um, and let's see. So trading platforms with technical analysis tools. So you have TradeNet, which has a technical analysis program that you can use. And you have thinkorswim, which has technical analysis programs that you could use. So either one is good, whether you want TradeNet because they give you, 20 times your money, or you want thinkorswim just for whatever reason. It's really up to you what you pick. I'm not pointing in either direction. Um, I did start with thinkorswim, but then ran over to TradeNet pretty quick, and I bounce back and forth every day. So, all right. Let's move on. Stock screeners, scanners, and artificial intelligence. Screeners, scanners, and now even artificial intelligence can help you find stocks, options during, even but after, during, and even before they have rallied. So, obviously only trade ideas, the artificial intelligence program will let you know when a stock is about to take off. But you can kind of get that from regular scanners as well. So why don't we go through each scanner real quick since we know what they are. So the first one is the thinkorswim scanner, which unfortunately, let me see if I turn on demand off. Okay, yeah, there we go. You can set up your scanner, and it's pretty cool. You can set it up to find whatever stocks you like. So if we're doing the 5 finger strategy, I could change this from, whatever, 90 cents to $12. And volume, I want the volume to be at least 20,000. Shares or float, which is something you'll learn about. I want there to be no more than um, 20 million shares afloat, and you know, and let's scan. And I don't think anything will come up right now. Oh yeah, so there's a bunch of stuff that came up. Let me pop this up real quick to 30,000 because that. Oh yeah, the actual limit is 40,000. Okay, so we got a whole bunch of stocks here. You can see a lot of them are up really high, and you take them, you plug them in your charts, or you can have a multiple chart display. This is how I like to watch the market when it opens. So I can see right before the open which stock looks like it's about to take off, right? So this is one scanner that you could obviously use. And then the next scanner that was on that list was Benzinga Pro. This is By the way, I'll put links for everything down below. But this is another pretty cool scanner because you sign in. There's a little chat room, but the chat room honestly is kind of lame. And then you have your scanner, so you can go, after hour scanner. These stocks were taking off. You got your regular market hours. You got your pre-market hours. And you can change the time to within the last 15 minutes. You can change the time to the whole session. But just for as an exercise, we're going to do something in a minute. So this is Friday's pre-market, and at the very, very top, okay, you can see this OASM. Now, I typically find the stocks with the most obvious um, technical and, even fundamental, um, bits are basically the ones that actually take off. And that's the five. Typically they're up really high, they got a really low float, they got a lot of volume, blah, blah, blah. So we're going to come back to OASM in just a second. And then last but not least is the trade ideas scanner. And this thing is incredible. This comes with artificial intelligence. They got a way that you can hook it up to your broker and it trades for you. It makes an average of 1.24% a day. But, every morning we come here, we do our pre-market scan. You got all these Hollies are the names of different artificial intelligence, and then Omni AI is like a mix of all of them, and there's just so much you can do. You can go here, right click, configure, and put in exactly what you're looking for. Like, I want, stocks that have, um, let's see, add default or more here. I want the float, or we didn't really go over float yet, but I could add a filter. I want the float to be minimum 1, maximum no more than 40 million. Now, all float means is shares. It's just how many shares are available for trading. And on Trade Ideas, it's called float, and pretty much everywhere else it's called float. But for some reason, TD Ameritrade, they don't have float. They just have shares. So, but anyway, you can configure this whatever way you want, and then the stocks will pop up that match your description. Um, and there's just so many other things on here. It's ridiculous. Trade the gap. They got stocks that are about to gap up, and just great, great, great program. Top recommended program. Obviously, this is a little on the pricey side. I don't know, it's like 100 to 200 a month. But I do have a discount code actually that I can give you if I didn't already add it in the thing below. But let's go back real quick. Let's finish something here. Let's finish the presentation, and then we'll take the test, and then we'll do a trade. And it'll be pretty cool because we're going to utilize the scanners, what we've learned, and pretty much everything else to do a trade. So, all right, so that's it. So that was the final one. You got thinkorswim, which is free, comes with the trading platform. By the way, if you decide you want to trade on Ustocktrade and you want to get a TD Ameritrade account, you don't have to put any money in it. They'll still let you download thinkorswim. So it's free to get this program, which is amazing. And the reason they leave it free is because they got a high conversion rate. It's like 1 in 4 will end up actually putting money in thinkorswim. Benzinga Pro is more on the I think about $100 a month side, and they do have a 2-week free trial as well. And then Trade Ideas is like anywhere from 100 to 200, but that's like your advanced, pretty much what most advanced traders use. All right, so that's that. I want to go ahead and we'll do the quiz now. So you can feel free to pause the screen, but I'll go ahead and I'll read these to you. What word describes when a stock is making a lot of gains really quickly? Okay, and that's question number one. And that's question number two. Which stock trading platform also has a scanner built into it? Okay, and there's actually two, but we've only talked about one. Um, what do we call money that we consider safe for investment? That's number three. Number four, How much money will be in your TradeNet sub-funded account if you purchase the intro package for $399? That's number 4. Number 5, which two brokers allow you to make unlimited trades with no PDT rule and same-day settlement? There's two of them. Which two brokers allow you to make unlimited trades with no PDT rule and same-day settlement? So uh, make sure you keep all this in your notebook. Pause it if you have to right here. And in about 3 seconds, I'm going to start going over the answers. Okay, answer to question number 1. What word describes when a stock is making a lot of gains really quickly? Rally! Stock is rallying. You know, sometimes you'll hear them say on CNBC's, you know, S&P is rallying today. That just means it's doing really good. Okay, question number 2. Which stock trading platform also has a scanner built into it? Thinkorswim by TD Ameritrade, of course, and I said there was a second one, and that second one is actually TradeNet. Their platform has a scanner built into it as well. Um, now, question number 3. What do we call money that we consider safe for investment? Investable funds. Very good. Number 4. How much money will your TradeNet sub-funded account will be in your TradeNet sub-funded account if you purchase the intro package for $399? $14,000 in tradable funds. And then finally, which two brokers allow you to make unlimited trades with no PDT rule and same-day settlement? Ustocktrade and TradeNet. And that is it, folks. And just real quickly, just to show you guys a little quick demonstration of a trade this Friday that we actually caught, but it happened so quick, and I was trying to put it in the text alerts. It was so quick, but I just want to show you how I found it. Ready? So we're going to exit here. And all right. So this is Friday. Oh, I gotta fix this. 9:29. So you can see how cool it is. I can go back in history at any time that I want. I'm just choosing Friday. All right, so let's go to my flexible grid. So OASM, where did I find this? Right? Where did I find OASM? Well, it's right here. It's the biggest gainer on the pre-market scanner on Benzinga Pro. So normally I would take OASM and put it, let's say, right in one of these charts, like OASM. We always put the top ones here, and then we watch in the morning. The other one was TYME, which ones might break out. So there's two. These are the two biggest ones of the day, and I don't even remember what happened to time. But I want you to notice something very important here. And here's a quick little introduction into pre-market, into technical analysis. In the pre-market, well, you know what? I'm not going to go into the VWAP, but for the most part, this stock stayed above the VWAP. That's always a good sign. This one was a little choppy. It popped up, it popped down. Now the market's open. I'm going to put it on pause real quick. I already thought we were paused. And this is what I would suggest doing in a situation like this. I would say do not buy this stock unless it breaks over 206. And I would tell you the same thing about time. I would say do not buy time unless it goes over 173. Why is that? Because that's a breakout point. Hello, this is Breakout Trading University. Pre-market highs are always breakout points. 52-week highs, which basically means that's the highest the stock has gone in 52 weeks or a year. That's another breakout point. But this is a clear pre-market high on a very strong stock. And this is where fundamentals sometimes mix into technicals. It's got a ton of news on Friday. And it's a biotech stock. Biotech stocks typically tend to take off. All right, so what I would do is I would go here and I would say I'll only buy this if it goes over 206. So that's where you go to stop, right? And let's say I want to get, it's a $200 stock. I have $2,400, right? So I want to save some money for time. So let's say 2468, 2468, 10, 12, let's say 700. I'll buy 700, and you always buy in lots of hundred when you buy stocks, and that'll be made clear to you. It's just the way that these systems um, basically execute them in lots of hundred. It's always easier to get a fill if you buy in lots of hundred. All right, so I would buy 400 at a stop above, never at, above 206 because it's got to break over it. So I'll go right to 207, right click, buy. So now I have a buy order at 20. Oh, see, I almost made a mistake. It said 100 there. You always got to make sure you hit the tab button. But I'll go right to 207, hit buy. So now I got my 700 shares, and that will not fill unless the stock breaks out. It couldn't get any more beautiful than that, right? I don't got to do nothing but sit back, and if it breaks out, it breaks out. I know I'm going to make money. Let's see. Although there is something called a false breakout, and that's where it does break out and comes right back down. What you do in those situations, there's two options. Either you sell half your shares immediately and see if it turns around, or you just get out right away. And then let's see, let's take a look at time. Okay, I like time if it goes above the pre-market highs here. So this is about $2 as well. So I could probably get 600 with the money I got left, assuming I only have 2,500 or 2,400. And mark stop. What is it? 174. Now 173. I'm gonna go to 176. And I'm going to put my buy there. And the reason I'm doing that is because 174 is very close to 175. Now, 175 is a quarter, and quarters can, in small stocks like this, be considered psychological resistances, which is something I will explain in another class. But let's go ahead, and so that's why I went ahead and I put it above the psychological resistance and got it at 176. Now, let's put both these stocks together, how they just were. And I'll make it bigger for you to see as well. Oh, no. All right, so we're really only focused on these two. So let's go ahead and go right here, and we're going to hit play. All right. So again, this stock is dumping. We didn't buy it, so we don't care. We only have an order ready in case, it breaks out. But this doesn't look like it's going to break out. Now we could technically check the pivot points and see if it's just going down to a pivot point and getting ready to reverse. I will buy lower than the breakout point if there's a pivot point there. So let's say there's a pivot point at 149. I would buy it right there. But we don't know if there's a pivot point there because we didn't look. And that's something, again, like I said, for another class. So far, nothing's really happening. Let's fast forward. Okay, boom. Noticed that there was a big movement. It was right at this time that I was like, this is going to break over the pre-market highs. I literally went over to put in the text alert. Guys, buy OASM over $2.06. And then this happened. So we didn't get filled yet. Didn't get filled yet. Guys, by the way, these yellow dots here, that is the 9-day moving average. Okay, boom, we got filled at 209. All right, so now we're in. That's usually how a breakout happens. So now all we need to find out is now, boom, I want to pause it real quick. Did you notice this candle here? This little crossover arrow, not candle, crossover arrow came right here. That arrow is literally called a crossover arrow, and it literally is telling you to buy. And it's fairly accurate. Matter of fact, TD thinkorswim, this program, used to be bought up solely for the purpose of those arrows, those crossovers. But now, wow, look at the stock. It's taking off. We're up already a nice amount, right? We have, how many shares do we have? Active trader, 700 shares. It's taking off. I want to take a partial. That's the first thing you need to do. I'm selling 400 shares right here. Boom, sell market. I'm locking in money because at any minute this could turn around. So I'm just going to lock in money, lock in money. Now it's at 305. How many shares do I have left? 300. I'm going to sell 200. That's fine. Right here. Boom. Sell at $3. Let's see if it goes any higher than $3. And I actually forgot what it went to, but I think it went to like 333, something like that. But I think it got halted here. Nope, not halted. Just sell it, get out of it. So you can see basically that was one technical play. You find a stock that is rallying in the pre-market, you find its high point, and then you put a buy order, a cent or 2 cents or 3 cents if it's near a psychological resistance, over that spot. And that's just something I wanted to show you really quickly. I don't know how much we made on that trade, but it was a lot. P&L on the day is 1121, but I did a practice run earlier just to make sure that I had the right date. All right, guys, but that is it. So today is Sunday. Technically, I'm re-recording this. We already did this lesson, but we are going to be having breakout trading universities, day trading 101, course 2, which I believe is chart candlestick patterns. And there are just a bunch of candlestick patterns that are amazing. And, you know, technically this is you can consider this a bull flag, but that's technically not a candlestick pattern, even though it kind of is. But we're going to be going over candlestick patterns in Monday at 6 p.m. Eastern Standard Time. We'll be going over it live. Please make sure you subscribe. That way you get any alerts. And other than that, this class is longer than the other one, even though I tried to make it shorter. But this is Luke from Breakout Trading, and I am out. I will see you Monday.